Neil here with your October 2025 Palm Springs real estate market update. And this month, I'm doing something different. Instead of just throwing numbers at you, I'm answering the 3 questions that actual buyers are asking right now on Reddit about our Palm Springs market. Because here's the thing, the data tells one story, but what people are really worried about, well, that's where the rubber meets the road. Here's the top questions. Is inventory really shifting to a buyer's market? Why aren't prices dropping if sellers have to negotiate? And did the pandemic boom finally end? Let's dig into what's actually happening in October 2025, and I'll give you the straight answers you need, whether you're buying, selling, or just watching our local Palm Springs real estate market. October brought us some interesting developments. We're now officially 32.6% below our historic normal sales levels. That's significant. Inventory climbed another notch to 2,799 units. That's up 15.6% from last year. The valley-wide median for detached homes or single-family homes hit 625,000. Now that's down 2.3% year over year. Condos or attached homes are at 420,000. That's down 3.4%. The current median price of an average single-family home in Palm Springs is $1,126,285. Now that's down 2.9% from last year. But before you panic or celebrate, whichever it is, let me explain what this really means. Here's what the numbers don't tell you. We're not in a crash, we're in a recalibration. The market is finally returning to something that resembles normal after 5 years of absolute chaos. And that's actually really good news for most people. Now let's answer the top 3 Reddit questions. Is the Coachella Valley's increased housing inventory a true buyer's market now? Okay, let's tackle this head on because I see this question everywhere. The short answer is we're getting there, but we're not quite in a classic buyer's market territory yet. And here's why. Our months of supply ratio hit 4.6 months valley-wide. Traditional real estate wisdom says 6 months is a balanced market. Below that favors sellers, and above that favors buyers. So at 4.6 months, we're in this interesting middle ground. But here's where it gets interesting, and this is what Reddit doesn't tell you. Location matters enormously right now. Desert Hot Springs, 4.0 months of supply, still relatively tight. La Quinta, 4.7 months, pretty balanced. But Bermuda Dunes, well, they're at 6.0 months. That's legitimately buyer's market territory. Cathedral City is also fascinating right now. They're at 4.9 months of supply, but homes are only sitting for 47 days on average, which is really quite good. Meanwhile, Palm Desert has 5.8 months of supply and properties are taking 70 days to sell. So when someone asks, is it a buyer's market? The answer is, it depends on exactly where you're looking and what price point you're shopping. Under $400,000, that's still competitive with only 4.2 months of supply. The sweet spot for buyers is actually $500,000 to $800,000, where you're seeing 5.2 to 6 months of supply. And sellers are really getting realistic about their pricing. The luxury market over $1 million, that's an entirely different animal. We'll talk about that in a minute. The bottom line on this Reddit question is, yes, buyers do have more leverage than they've had in the past 5 years, but calling it a true buyer's market across the board, well, that's not quite accurate yet. Reddit question number 2. Why is there a growing gap between seller expectations and buyers' willingness to pay? This is the million-dollar question right now, literally. And the answer reveals everything about how this market is actually working. Here's what's happening. Many sellers bought or refinanced between 2020 and 2022 when the prices were at their absolute peak, but they're sitting on mortgages that reflect those values. Meanwhile, buyers are looking at today's reality of 6.2 to 6.6% interest rates and prices that, while they're stable, they're not climbing like they were. Let me show you the actual data valley-wide. Single-family homes are selling at an average 2.7 discount from the list price. Condos, 3.7% discount. But look at the variations by city. Desert Hot Springs sellers are barely giving any discount, just 1.7% below the list price. These are sellers in a stronger position who don't need to move. But Rancho Mirage, well, the sellers there are accepting 5.4% discounts on average. And Indian Wells is also at 5.4%. What this tells us is that the luxury market sellers had inflated expectations that are now colliding with the actual reality that buyers have. And buyers in these markets are negotiating hard because they can. And only 11.3% of the homes are selling over the list price right now compared to 14% just last year. That might not sound dramatic, but think about what it means. Nearly 90% of the sellers are either taking list price or less. The price brackets tell an even clearer story. Homes under $300,000 are only giving 5.8% discounts. The $300,000 to $500,000 range, well, they're at 1.5 to 2.4% discounts, which are very reasonable. But once you hit the $700,000 and above, discounts jump to 2.6 to 5.7%. So to answer the Reddit question about why there's a gap, well, it's because many sellers have not adjusted to the new reality. They remember 2022 when everything sold over asking price in just a few days. That market does not exist anymore. The sellers who price realistically from day one, well, they're getting sold in 45 to 65 days. The ones chasing yesterday's prices, well, they're sitting for 70 plus days, and eventually they cut their prices anyway. If this video is helping you clarify whether Palm Springs living might be right for you, I want to personally invite you to schedule a free, no-obligation Zoom call with me. This isn't a sales pitch. It's a genuine opportunity for you and me to discuss your specific Palm Springs area real estate goals. I'll answer any questions you have about the neighborhoods, the costs, or lifestyle changes, and more importantly, we can work together to formulate a specific plan that's tailored to your situation, your timeline, and your budget. So whether you're looking to buy, sell, or invest, I'll give you my honest guidance about your best next steps. You can book your free consultation using the link in the description below. Just pick a time that works best for your schedule. There's no pressure, no obligation, just valuable insights from someone who's helped many people successfully make this transition. Reddit question number 3. Has the pandemic boom really ended? And what does the return to normalcy mean? Well, this is probably the most important question because it's really asking, should I wait to buy or should I panic sell? And the answer affects your biggest financial decision. So let me walk you through what actually happened from March 2020 to September 2021 sales at the Coachella Valley. They jumped 59.4%, way above historic norms. Prices went absolutely crazy. And then starting in 2023, sales dropped 34.6% below normal. So we're currently at 32.2% below normal. So yes, the pandemic boom is definitely over. But here's what return to normalcy actually means, and it's not what most people think. Look at our current metrics compared to 2019, the last truly normal year. Inventory in October 2025 is 2,799 units. Back in October 2019, well, we had about 2,600 units. So we're essentially back to normal supply. Median selling time today is 59 days. Back in October 2019, it was 47 to 52 days, so slightly lower, but not dramatically so. Price premiums. Discounts in October 2025 right now are 2.7% for houses. Back in October 2019, it was 2.5 to 3%, so it's basically an identical situation. See the pattern? We're not returning to normalcy, we're really already there. What we're not returning to is the artificial, inflated, historically abnormal market that we had in 2020 to 2022. But here's the key difference from 2019. Prices are now 40 to 50% higher than they were back then. A home that sold for $450,000 back in 2019 is now selling for $650,000. That gain is locked in. What we've lost, however, is the frenzy, the multiple offers, and the waiving of contingencies. So when people ask if the bubble has popped, well, the answer really is there really wasn't a bubble in the traditional sense. There was a massive demand shift as people reassessed where and how they wanted to live, but that shift is done. The people who were going to move here have mostly moved, so now we're back to more normal population growth, normal buyer-seller dynamics, and normal seasonal patterns. And you know what? For most people, that's really actually better. Okay, so after all those Reddit questions and all this data, what should you actually do? This is legitimately your best opportunity in 5 years as a buyer. You have selection, you have negotiating power, and sellers are motivated. Can you get 10% off? Well, probably not. Can you negotiate 3 to 5% off? Ask for closing costs and include real contingencies? Absolutely. Target the $500,000 to $800,000 range where supply is the highest. Consider Desert Hot Springs or Cathedral City for the best value. And don't be afraid to walk away. There will be another house. The wild card is interest rates. If rates drop to the projected 5.9% by the year end, competition will increase. So while you should negotiate hard, don't wait for perfection. For sellers, you should price it right from day one. I can't stress this enough. The days of let's list high and see what happened, well, those days are over. Homes priced correctly sell in 45 to 60 days, but overpriced homes sit for 70 plus days and eventually sell for less than if they've been priced right initially. Here's the data. Only 11.3% of homes sell over list price. That means if you're depending on buyers bidding up your price, you're depending on being in the top 11% of listings. Is your home really that special? Sellers should consider offering buyer incentives instead. A rate buy down can be incredibly powerful when rates are 6.3% or above. Be flexible on your terms and understand that your competition isn't just other homes, it's also the buyer's ability to wait for the right home. The Coachella Valley real estate market in October 2025 isn't giving us any fairy tales. It's not a crash and it's not a boom. It's just normal. And after 5 years of chaos, normally is actually pretty good. We're sitting at 32.6% below historic sales levels, but prices are stable, inventory is up 15.6%, but not oversupplied. Buyers right now have leverage, but sellers are not desperate. So it's a real market where both sides need to be reasonable. If you're trying to navigate this market, whether you're the Reddit poster asking about inventory, the seller wondering why buyers won't pay your price, or anyone trying to figure out if the pandemic boom is really over, I can help. I'm offering a free 30-minute Zoom consultation where we can discuss your specific situation. We can run the numbers for your target neighborhood, and we can create an actual strategy, not just a sales pitch, a real conversation between you and me about what makes sense for you. It's free and there's no obligation. The link is in the description, or you can reach me directly at the contact information in the description below. The Palm Springs real estate market is changing, but it's changing into something more sustainable and actually more reasonable. And that's good news for everyone who's in this for the long term. Now, watch this next video all about living here in Palm Springs.